since we have a new guest joining us on Trading Hour today, and I think it is his first appearance, I thought let's put in some context. Gautam Baid is going to be with us on the show today. And Gautam is someone who's worn many different hats over the last couple of years, from a fund manager to an author. And Gautam is joining us all the way from the US today. So Gautam, thank you so much for staying up late for us. And I understand that now you have a new partnership with the Complete Circle. You're going to be running a PMS strategy for them. So lots going on. Good to have you on the show. And thank you for making the US-India Connect first to begin with. Welcome to Trading Hour.
Thank you, Surabhi, and hi, Rima and Pavitra. It's a pleasure to be on your show.
Okay, so let's get the conversation going at talking about the interesting juncture at which we are. And you are looking at two different PMS strategies. One is with Complete Circle, the other one is Stellar Wealth Partners. And you're managing money, I'm guessing, across market capitalization. So, Gautam, how do you see the opportunity here in India? Particularly on the mid-cap and small-cap side. It's getting so interesting. We are seeing new small-cap funds being launched. We're seeing a surge in inflows on the small-cap side. So my first question really is the small-cap and micro-cap side of the market getting maybe a little too heated?
Well, Surabhi, every new bull market has to start with a fundamental foundation of disbelief. If there is widespread belief in the bull market, then that is when the bull market actually tanks off and we have a bear market. But every new bull market has got three stages. In stage one, stocks across the board from across sectors get revalued back to fair valuation. In this second stage, you have a narrow and selective rally where stocks with very good earnings visibility do very well and stock pickers get rewarded very handsomely. And in the third and final stage, you have a widespread euphoria in which junk stocks go parabolic. And then finally, the bull market comes to an end. So I believe we are just in stage one. And this particular bull market in India, which is just started a few months ago, has got all the fundamental elements of a multi-year bull market. So for a sustained multi-year bull market, you need two elements. You need a revival of the credit cycle and you need revival of the capex cycle. And this is exactly what happened during the beginning of the 2003 to 2008 bull market. And this bull market is looking very similar to me, just like that particular bull market.
Gautam, Rima here. It's great to have you on the channel. I want to start by talking about stocks and the narrative behind some of your picks. One of them is Syrma SGS. Now, this entire electronic manufacturing space has been hot. Flows have been diverted towards all the names, whether it's Dixon, Kane, Syrma, and even the new listing, Cyan DLM, which continues to run fast and hard for the second day in a row. But the one concern which is flagged off is the valuation. So even as growth rates would look good, has the stock market priced in all the good news and a multi-year strong earnings upcycle? And in that sense, there may not be too much alpha to generate if you enter in at current levels. How would you counter this argument on the electronic manufacturing space? And in that, tell us, amongst all of them, why have you gone with Syrma SGS?
Well, Rima, for any bull market sector to be a true leader, it has to show the fastest top line and bottom line growth. So this entire electronics manufacturing space in India right now kind of resembles where real estate and infrastructure was in the beginning of 2004, 2005. So this is an industry with very average quality businesses, very low entry barriers. But for a new sector to emerge as a bull market sectoral leader, it has to be something new. And there has to be a lot of high growth in that particular sector. So within this particular sector, I think earnings growth will surprise on the upside. And that is how you get true bull market leadership. The reason for choosing Syrma SGS over the other EMS players was that this was the only IPO from this particular space in which the entire IPO proceeds was going back into the company to fund its capex. Many of the other companies were doing a 100% offer for sale in which the money was not coming back into the company. But at Stellar Wealth PMS, we like to focus on those IPOs where large part or almost all of the IPO proceeds go into growth capex rather than going into the selling shareholders' pockets.
What's the earnings growth the street is expecting from a company like Syrma SGS? Because you're saying that we could actually see EPS upgrades, the company's beating market performance as well, expectations. So what's the current consensus expectation and what is your own growth forecast for Syrma over the next 3 years?
Currently, the stock is trading at around 40 to 45 times current year earnings. Yeah. But this entire industry of electronics manufacturing services is expected to grow at 25% for the next 3 to 5 years. So when an industry grows at an overall aggregate level of 25%, then the leading players in that industry tend to surprise on the upside and grow at a much more faster rate. So it won't be a surprise to see, many of these leading EMS players actually growing faster than the consensus estimates. Most consensus estimates peg the expected growth at 35 to 40% over the next 3 years. But given the sheer size of the opportunity and the kind of growth capex that these players have lined up, it's possible that they may beat the consensus by a wide margin.
Okay, Gautam, it's good to have you on the show and to speak with you. I have to ask you about the Jio Financial Services demerger that we are going to see. A, how do you look at that? And what do you think it will do to the entire NBFC landscape? So how would you look at it once we do have that demerger play out?
Just a standard disclaimer, we do hold Reliance Industries in our PMS for our clients. Okay. And we are primarily holding it to play the Jio Financial Services demerger. And just to give you some context about the numbers here, so Jio Financial Services, by virtue of its 6.1% holding in Reliance Treasury shares and its other assets, will start with a net worth of almost 1.5 lakh crores. And generally, NBFCs lever up to 6 to 8 times their book value. Bajaj Finance, with 44,000 crores of net worth, has got an AUM of 2.7 lakh crores. So we can just do the simple math and see just how big a behemoth can Jio Financial Services become. And unlike Reliance Power, which basically IPO'd in January 2008 without any business, and just like we are having Jio Financial Services, crossing 1.5 lakh crores on listing possibly without any existing big business at hand. The key difference here is that for any successful NBFC, your primary bet is trust on the management. And here you have got Hitesh Sethi joining with 20 years of experience in banking, mainly from ICICI Bank, and you also have KV Kamath as the chairman. The second big success factor, possibly for Jio Financial Services, is its low cost of funds, because it can leverage Reliance's industry's balance sheet and AAA rating. And in a commodities industries like lending, low cost of funds is a huge advantage. For instance, HDFC Bank is able to lend to the best borrowers with the best credit at good interest rates and still make healthy margins because of its low cost of funds. So that is a very big advantage which Jio Financial Services will have straight out of the gate. And they can also leverage the existing 44 crore subscribers of Jio Telecom, and they can also leverage the existing customers of Reliance Retail. So all the fundamental building blocks are there for a successful NBFC franchise, but we have to keep in mind that every good lender in India has to go through one down cycle, and it has to be tested in a down cycle. That is when you get to know the true quality of a lender. So without Jio Financial Services actually going through a down cycle, it's too early to call it a successful franchise, but it does have all the building blocks in place for sure.
Very interesting, Gautam. And again, the references to 2007 and the Reliance Power IPO 2008 really take me back in time. So I'm going to, come back to where you began, because you began by saying that this current market setup has all the makings of a multi-year long-term bull market, much like what we saw between 2004 and all the way up to 2007. So EMS is one space, and we've discussed that at length. Where else, if you're convinced that we're going to see a 2004 to 8 kind of a bull market, then which are the other sectors where you'll take that bet, where you're going to see that kind of, absolute stunning revenue growth? And let me throw in one final question with that. What kind of valuation multiples should we be prepared for? I mean, EMS itself, one can argue that it's tough to wrap your head around 50 times, 60 times forward earnings, right? So what other sectors could blow the valuation argument through the roof, and you just have to live with it because it's a bull market?
Well, one of the safest ways to play a multi-year upcycle, which is being backed by capex, is the entire lending space. So at Stellar PMS, we are very, very bullish on the entire lending ecosystem: private sector banks, affordable housing finance players, microfinance, and NBFC. So that is an indirect way to play the upcycle in the capex. And here again, the growth will not be a problem in this quarter. From this quarter onwards, net interest margins may normalize slightly, but the growth, as long as the growth is there, and most importantly, as long as the credit quality remains robust, till that time the markets will keep rewarding these lenders with higher and higher price to book multiples. But the markets will not be tolerant of a slip up in asset quality. So in case of lending companies, the markets are fine with a bit slower growth, a bit lower return ratio, but the markets will not tolerate bad asset quality. Thankfully, the public sector banks have given a very good guidance for FY24, saying that the asset quality will remain very strong. So that gives me hope that this credit cycle has got a lot of upleg to it.
Okay, thank you very much for joining in.